Welcome everyone. I'm your analyst from HDIN Research. Today, we're dissecting a giant. You know them, you probably have their blue cans in your fridge. But here's the hook. While you were busy snacking, this corporate titan just pulled off a balancing act that would make a Cirque du Soleil performer sweat. Let's dive into the 2025 PepsiCo autopsy. 2025 in a nutshell? Their top line, that's the total cash raining down on them, hit $93.9 billion. To put that in perspective, that's enough to buy a brand new iPhone 15 for every single person in the United Kingdom and still have change for lunch. But despite all that cash, their final take-home pay took a hit. Why? Because sometimes, even the big guys have to admit a bad bet. Section 1. The big picture. This is where we look at the weather before we complain about the ship. In the world of snacks, if the global economy sneezes, everyone catches a cold. PepsiCo didn't just bring an umbrella, they built a bunker. Look at this map. PepsiCo is more global than most religions. While the US is their safe home base, bringing in over $52 billion, the real action is in the others. International growth is the adrenaline shot, keeping the heart beating, while the North American market starts to look a bit mature. Think of it as a veteran athlete who's lost a step in speed but still knows how to win on experience. Now, the elephant in the room. Even a big blue company can trip. They took a $2 billion hit on Rockstar Energy. In plain English, they bought a shiny toy for a premium price, realized nobody wanted to play with it as much as they thought, and had to tell their parents, the shareholders, that it's now worth half what they paid. It's a classic champagne taste on a soda budget mistake. Section 2. Let's look at the plumbing. We're going to see how efficiently this machine turns corn and sugar into cold, hard cash. This is the inner circle stuff. How did they grow while people were buying fewer bags of chips? Simple. They charged you more. Volume was down, meaning you bought fewer bags, but net pricing was up 4%. It's the ultimate corporate magic trick. Sell less, make more. They're betting that your craving for Cheetos is stronger than your fear of inflation. So far, they're winning. Let's talk ROE. At 42.9%, this company is a money printing press. For every dollar the owners put in, the business is generating nearly 43 cents in value. Their net margin, or what's actually left in the wallet after the party, is 8.8%. In the world of groceries, that's not just good, that's VIP section good. A tale of two cities. Asia is the rising star, like a tech startup with deep pockets. North America? It's the reliable uncle who's currently dealing with a very expensive divorce. Specifically, the Rockstar impairment and integration costs that are eating his lunch. PepsiCo isn't just a soda company anymore. They're becoming a software company that happens to sell chips. They're using AI to make sure that the exact bag of barbecue chips you want is on the shelf before you even know you want it. This isn't just tech talk. It's about shaving seconds off a delivery route, which, at their scale, saves enough gas to fly a Boeing 747 around the world a few dozen times. Final stretch. Where are we going? Because in business, if you're standing still, you're actually moving backward. Faster than a Tesla, in ludicrous mode. Sustainability isn't just about hugging trees for PepsiCo, it's about protecting the snacks. If there's no water or good soil, there are no potatoes. No potatoes. No Lays. No Lays? Well, that's a world I don't want to live in. Their Pep Plus strategy is basically an insurance policy against a dying planet. The reality check. Strength. They own the shelf. Weakness. They're stuck with Walmart. Opportunity. Healthy stuff. Because we all want to feel better about our bad habits. Threat. The sugar police. Governments are coming for the syrup. And PepsiCo has to stay one step ahead of the tax man. The 2026 roadmap. It's all about productivity. That's corporate code for cutting the fat. They're looking to save $5 billion. That's not couch cushion money. That's enough to fund a small country's space program. They're leaning out to get meaner. Bottom line, PepsiCo is a massive, slightly bruised, but incredibly powerful engine. They've admitted their mistakes, doubled down on their winners, and are betting big on a digital, healthier future. If you want the deep dive data without the jokes, you know where to find us, at HDIN Research. Thanks for riding along. Stay hungry.